Hi guys, this is Shilpa Raidas and Jayavara, and we welcome you to the Midweek with Indiacharts. Today we are going to decode market trends, impact on dollar decline, gold and silver outlook, Indian index divergences, and sentiment insights. So we have a lot in stock, so let's begin right away. Jay, my first question to you would be that the dollar index has declined sharply recently, and that seems to have a positive impact on the equity market. Is that so? Is this understanding correct of us, Jay? Also, what's your view on the dollar index? Are we going to see further decline there? And what's your view on gold and silver as well?
Right. So I'll quickly share my screen. So when we look at the dollar index, yes, I mean, it has seen a sharp decline in the past, 2 or 3 weeks. And that has actually led to a positive impact on the market, because that's where when the decline in the dollar index started to pick up pace, that's where equities also made a meaningful bottom, and since then they have been inching higher. So when we look at the S&P 500 index, or when we look at the US indices, there was a break of this trend line, but very quickly it reclaimed back the trend line. So now basically over here, if we draw a channel, so now there is a scope of S&P to even rise higher towards this 4800, 4875 kind of mark. So basically the initial resistance for the S&P 500 would be 4607. And if that gets taken out, then possibility of it rising higher towards the channel would increase. But yes, basically the thing is that in the US indices, it still appears that the up move is somewhere not complete, and which means that some positive momentum can continue in the near term, at least towards this upper Bollinger Band, which is of the weekly time frame. So we will basically go level by level, wherein if the high of 4607 breaks, then that's where there is a possibility of an up move towards the weekly upper band. And if the band starts expanding, then that's where we'll think that maybe an up move towards the upper end of the channel is possible. So frankly, right now what is happening is that I mean, in the upcoming Fed meet, now many are anticipating that there will be a pause, and the Fed governors, which come in between and they give their speech. Even there, they have mentioned it very explicitly that the rates, they are possibly done with the rate hiking thing, and now the rates are sufficiently restrictive, which means that there is a chance that now further we don't get the rate hike, and in fact the prevailing rates are good enough to bring the inflation down over a period of time. Okay, so that market is taking it positively at this point of time, and more or less, if you actually see, it is also a lot to do with the positioning, because when this correction had happened, we had published that the put call ratio, I mean the volume put call ratio in the US, that had spiked to a very high levels, which means that there was a panic in the US index and people were buying a lot more put, and that's why the volume put call ratio had shot up. Now with this up move, that seems to have cooled off, but over there, if we see, there is still some more room to cool off further. And if it does cool off further, then that means that there should be an up move in the near term. Basically, if not an up move, then at least there should be a positive environment in the near term, wherein we don't see a major decline, at least in the near term. So until basically we don't get the reversal point, we would assume that the current uptrend which the S&P has started, that is likely to continue. Now that is on the US indices, basically, where reasonably fine, and there are no signs of reversal yet. Now, when we look at the dollar index, that seems to be at a very crucial point. The reason why I say that is because when we look at the daily chart now, the problem over here is that when we see different charts, like, this is TVC, but when we see dollar index in ICE or some other chart, so over there, it may look like a three-wave decline. So this entire thing is red over here. But in other cases, there is not a clear five-wave decline, or not everything is red from the top. So that, sometimes lead to that question, like, how is the correction playing out? Because, if you purely look at this chart, then what we would think is that the top is formed over here. And since then, this is one, this is wave two, then this 1, 2, 3, 4, 5 is wave three. Okay, and we are seeing wave four, and now this could be wave five. But the issue, like I said, is that if this move is not clear, then the entire move after that goes for a toss, because if this is a five wave, I mean, from this high to this low, it becomes 7 legs. Okay, now 7 legs is basically a sign of correction. So that is where, because that clarity is not there in the chart, so we are watching very closely what the dollar index does from here. But one important observation is that if we actually draw a Fibonacci retracement from high to low, it has come exactly towards the 61.8% mark. Okay, so whether it reverses or it further goes down, that needs to be seen. But in this entire thing, I think there are few uncertainties. There are few uncertainties in the US indices, where we are trying to assess whether the up move, at what point does it get over, and how does the market react after that. Then in the dollar index, like I said, the five-wave decline, that is clean on this chart, but on other charts you may not see that cleanly. So there are few uncertainties over there, but there are two pockets, which we discussed in our last meet as well, where gold and silver, it appears to be giving a clean move. So over here as well, we had discussed earlier that this was an impulse move. Later we saw a pullback of this impulse move, and now once again the next leg of up move has started in gold now, which means that it is in wave three. The gold and silver possibly is in wave three, which means that if we go by the equality level, then it should possibly do 2140 dollars on the upside. Now, if it does that, then basically what happens is that this entire 10-year consolidation, which we have seen in the gold index, when we draw the trend line from the 2012 high. So this entire 10, 11 years sort of consolidation, that may end up breaking on the upside. And if that happens, okay, then I suspect a major, bullish trend is likely to start in gold. Okay, and mind you, if it hits that 2060 or 2070 kind of mark in the spot, then it will also be a all-time high level for the gold. So gold is actually looking very interesting. Now, the hurdle which gold has in the near term is somewhere around this 2050 to 2090 kind of dollar mark. Okay, so that 40-point band is basically the resistance. But when we look at the daily chart, when we look at the lower time frame, a lot of positives are there, which means that it is making higher high, higher lows. The daily momentum indicator is in bullish mode. When we actually look at the weekly RMI, that is also in a bullish mode. When we look at the monthly RMI, that is also in a bullish mode, and it has held above the averages. So basically, if we see the setup from medium to long-term perspective, it's good, and it is setting up for a breakout. But we need that confirmation, and that confirmation would probably come somewhere around 2080, 2090 kind of levels on the upside. And as in when it does, we will definitely inform our viewers. And yes, so that is on gold. Now, silver has a similar setup, but over here, the only thing is that, it is kind of lagging in case of up move, because over there, in silver, what has happened is that after the up moves, the declines have been sharp. Okay, so that's why it has not been able to reclaim the high, despite rallying very sharply in the last 1 to 2 months. But what it does is that now it is also setting up for a big breakout, because when we draw this falling trend line, okay, it is exactly trading around that level, which means right now on the upside, so somewhere around 25.10 to 25.20, that is where a big upside is. That is where a big resistance is. Now, we still have we still have 1 day left for the month, and we need to see if this high gets broken out decisively or no. But yes, like we saw for the gold, even for the silver, what we see is that the daily RMI is in bullish mode. It is making higher high, higher lows. And even when we do the wave counts, okay, so it appears that within 3, this is minor wave 1, minor wave 2, and now 3 is forming. Okay, so then there will be 4, then there will be 5th, and that will just be major 3, then there will be 4, and then there will be 5. So, in that sense, it has a long way to go. And if it unfolds in the way like I have shown over here, then definitely we are going to see the breakout in coming weeks and months. So yes, silver also looks very interesting. So apart from this trend line, what will happen is that even these highs, which were the interim highs that was there, even that will get broken on the upside once this trend line gets broken on the upside. So, silver is basically at a very crucial point as well, along with gold. And the way the setup is on the lower time frame and the way the setup is on the RMI, I suspect that that should eventually lead to an upside breakout, and that would mean that a positive momentum should continue in gold and silver in the days to come.
That's wonderful. That brings us a lot of clarity. Thank you so much, Jay. And moving on to the next question, Jay, the last time when we spoke, you mentioned that there were divergences between the key Indian indices, and you were not really sure then which way the divergences would resolve. Yeah. So do you have any clarity on that right now, Jay?
Yes. So in the past week, what had happened was that Nifty was consolidating in a very tight range. Okay. And many of the indicators that were indicating of a correction, like in the sentiment indicator, we had highlighted about the momentum, the daily swing basically. So what happened was that in this entire consolidation that we saw for 4-5 days, this indicator cooled off. Okay, and it nearly came back towards the 20 mark. So I think the low over here was 28 or something like that. So basically, almost came back towards this oversold zone, and now it has turned around. Okay, and what has happened that, see, earlier what happened was, when we look at the weekly chart, you could see a negative weekly close. Okay, and this negative weekly close was formed after taking resistance at the 20-week average. Now this week, what may end up happening is that the swing high will be broken on the upside. Okay, Bank Nifty will most probably close above the 20-week average, and if it does that, then it may also lead to a bullish crossover in the Bank Nifty index. So which means that all the things, those were pointing out towards that divergence. So what was happening earlier was that small cap was rising higher, mid cap had gone sideways, Bank Nifty was correcting. So, all the three index were kind of diverging. Now, what has happened is that Nifty has broken on the upside. Bank Nifty is trying to break on the upside. So, obviously, we'll need to see how the weekly close happens. But yes, the ingredients are there to say that, it will break on the upside. And the small cap index, which looked like a 5-wave rise over here. Okay, which looked like a 5-wave rise over here. Now, it seems like that this 5 is possibly going to extend, which means it is going to become 5 plus 4. Now, what do I mean by 5 plus 4 is that this was 1, 2, 3, 4, 5 that we were saying, correct? Now, this 5 will become 6, 7, 8, 9. which means that this becomes 1, 2, 3, 4, and within 5, it further extends in 5-wave rise. Okay. So that should also lead to a bullish momentum, at least in the near term, despite this giving a bearish crossover. Because see, over here, why we saw a bearish crossover was because, the Nifty small cap index lost momentum over here. There were 4 or 5 days of sideways activity and then a correction that led to a bearish crossover. But in this case, the averages were held. In fact, when we look at the small cap index, this is probably the most craziest chart because, there has been no negative close. I mean, since 26th October, that is probably, 1 month back, in that entire 1 month of trading which we have done, barely one negative close in the mid cap index, and it has continued to inch higher. So this was something new, and frankly, I had not seen, such kind of momentum. And what had happened in this entire process was that the blue line, which is the 40-hour exponential average, that never got broke on the downside. So now this becomes the watching point on the downside. So as long as the 40-hour doesn't break on the downside for the Nifty mid-cap index, that's where I think the bullish momentum is going to continue. And if it breaks, then obviously we'll review how the situation is. But as of now, when we look at the Nifty, Bank Nifty index, small cap index, and the mid cap index, all seems to be breaking above their previous high. And it seems like a positive momentum is going to continue in the near term. Now, when we come specifically to the Nifty index, okay, see, there are few things that, we are still thinking from the long-term perspective. And that is whether do we consider this as an ending diagonal pattern, or we consider it as 1, 2, 1, 2. Okay. So if we consider it as an ending diagonal, it implies that, once this trend line is hit, or, maybe there might be some throwover. After that, we can get a big correction. But if we do the wave count, that is 1, 2, 1, 2, then it would actually be super bullish. So as of now, we are not able to figure out whether we are in that super bullish mode or no. But at least even if we take it in a conservative case, then probably wave E is going to play in this ending diagonal pattern. Okay. And if that happens, then at least in the near term, we are possibly headed higher to 20,600 to 20,700 kind of level. Once we reach over there, we'll probably assess, whether are we in that super bullish phase, or are things going to turn ugly. So as of now, we don't know that answer, or, we cannot certainly say what is happening, because a lot will depend on how the dollar index behaves. If dollar index does give a confirmation of a major breakdown, at the point when Nifty reaches this mark, then maybe we'll have to think that it is 1, 2, 1, 2, and 3 that is going on. And probably all the recession fears, slowdown fears, what was there, that would be something that maybe market would have already factored in, and it will move ahead. So right now, we are not trying to jump to any major conclusion. But the only clarity which we got from yesterday's breakout, where Nifty broke above this sideways consolidation. Okay. So now what this has led is that in the near term, the trend is up. Okay. And if the trend is up, then the upside level to watch out for in the very near term is 20,500 to 20,700 sort of level. That is the broader upside that we are looking out for. And in Bank Nifty, what it does is that with this resistance breaking on the upside, it opens an upside potential towards the all-time high. And the all-time high for the Bank Nifty is somewhere around 46,370. Okay, so that would still be a good 2,000 points from here. That would be roughly around 4-5% kind of up move. That can still be expected in the Bank Nifty index. And once it reaches over here, we will assess how the situation is and then take it forward. But yes, with yesterday's breakout and continuation of the momentum that we have seen in today's trading session, it indicates that whatever divergence we were seeing earlier, that seems to be resolving on the upside, and that should broadly lead to positive momentum in the near term.
Okay, that's great. Any important observation in the sentiment data that is there on Strike, Jay?
Yes. So this time, I mean, the behavior of the FIs have been very different, because, you can see over here that in the past instances, when they have gone short to the tune of more than 1,00,000 contracts, okay, sorry, 1 lakh contracts. So over there, typically we have seen a good short covering rally. And that has also led to FIIs, eventually covering their short positions as well. But this time around, what has happened and what is very unique is that despite a 1,200 point kind of move, we have not seen this short covering at all. Now, if you're a bear, then you would think that maybe FI knows something, and that is why they are not cutting their short positions, and which may eventually lead to the Nifty index going down. But the flip side is that when we look at the history, okay, I mean, all the instances actually points towards the direction that, once the FIs go, shorting, I mean, when they short to more than like 1 lakh contracts or so, eventually there is a good short covering rally that has come by. And in that short covering rally, we have seen a meaningful pullback. So the whole question now over here arises that in the new expiry, I mean, now we are just about to end this expiry. Now there is one more day that is left. Okay. So obviously today will be very important to see how the FIs have positioned themselves. I mean, especially in today's trade. I mean, have they cut their short position, or are they continuing to hold their long position? If they continue to hold their long position, are they rolling over in the next expiry, or are they cutting their short position? All these things, we might probably get the answer in a day or two. And for the people who want to know what is FI positioning, they can probably log into Strike, and they can go towards the sentiment indicators. And within sentiment indicators, we have participant positioning, and within participant positioning, FI net index futures. That is where you will get all this information. So yes, I mean, that is the most critical point that we need to see. Because see, what happens is that if we see a short covering rally, then what I showed you on the Nifty chart, okay, which means that Nifty rising higher towards this trend line will be a good possibility to watch out for. Okay. So I think, the way, in my view, how it is going to play out is that, because see, right now, what has happened is that all the major resistance level for the Nifty index has broken on the upside.
Right.
Which means that as of now, the indications are that it should rise higher. And if it rises higher, I haven't seen, FIs being in their loss making position for a very long time, because they generally tend to trade with the momentum. Like you see over here, when the Nifty has gone up, they have been cutting their long position, I mean, short positions, and they have been, going long on the index. So that has eventually pushed the index higher as well. So I think this time around also it should end up being the same. And if that happens, then maybe the thing that we spoke earlier, that the Nifty index has the room then to go on the upside towards the 20,500, 20,700 kind of zone. Now, the other thing, I just want to update on that so that people know how this indicators behave, was that, early last week, we were highlighting that the swing was cooling off. Okay. So, which means that there was an expectation that the Nifty index can correct. But instead, what happened is that, see, correction can be of two types. It can be a sideways correction, or it actually corrects. So what ended up happening over here was that we just saw a sideways sort of consolidation. So you might not, understand much looking at the line chart. But when we look at the candlestick chart or the bar chart, see, this is what I'm talking about. Because when this was the highest point of the Nifty index, okay, where the swing made a lower high and there was a divergence, okay, which means that swing has made a lower high. Swing has made a lower high and the prices have made higher high. What followed next is that swing cooled off and the index turned sideways. Okay. Now, one thing which is very important that we kept highlighting was that we are watching very closely the high of the Nifty index, which is 19,875. If that gets broken on the upside, then we'll be forced to think that this consolidation was not a distribution, but it was possibly an accumulation consolidation, or you can say it was a pause and it should continue rising higher. Okay. So the moment yesterday it closed, so see, yesterday also it wasn't that decisive. I mean, it closed by 10 points or so. But today, the way it opened gap up and it sustained in the first hour of the trading session and it kept building higher and it kept building its gain, that indicated that this breakout seems to be genuine. And whatever this cooling off that we have seen in the momentum indicator, that should now start rising higher. So now possibly, it can again go back towards this 80 mark, 90 mark, and, stay at the higher levels. So that is how, this indicator may probably behave. And then, we have seen this. So we have seen some minor cool off over here, because again, what had happened was that over here, the 20-day, it got into this overbought zone. Now there has been some cool off. Okay. Now this is the first overbought zone and this is the second overbought zone. So once we come towards this second overbought zone, that's where, we can say that it is reaching towards an extreme and we need to be a little cautious. But when it is over here, that is in the first overbought zone, there is a scope that it can again go higher and, test that second overbought zone. So that is a distinct possibility. And as the up move in the Nifty index unfold, it can probably lead to this the 20-day ratio, ED ratio, higher towards the second overbought zone mark. So over here, please, just for our viewers to understand, the values are not important. It is the line that is important, because these values we have arrived with some calculation. It is the behavior of the line that is more important. And wherever, we have seen this line turning around, that is where we have marked this overbought and oversold zone. Okay. So that is on, the short-term indicator, which is the 20-day advanced decline ratio. Now, also, see, one more thing that is happening, and, that is also very interesting. And I think over here also things may turn around, is that despite Nifty, consolidating or rising higher, this indicator was going down, which means that there was more call shorting that was happening, right? With today's breakout that we have seen, now I think that this should again pick up and probably rise higher, because that's where in the past, we have seen this level going to 1.1 or something like that. And currently it is 0.86. So that's where again it leaves some scope on the upside. Because see, the thinking was that there were divergences that we mentioned, that, Bank Nifty closed negative, Nifty was sideways, and mid cap was rising high. All the three were in different direction. And on top of that, we had these sentiment indicators, which were giving us a red signal that, you need to wait and you need to see how things unfold. Because see, what happens is that indicators are, they will try to give you a warning, but ultimately price also needs to confirm. So in this case, what was happening was that indicators were throwing you that red signal and they were telling you to wait and watch. Price action was something that was not confirming all this time. And today we have seen the price action breakout on the upside. And that means that these indicators which have cooled off in the past 1 week, now, there is a scope that they further rise higher. Now, when this ratio rise higher, that means that more and more people will come and they'll short puts. And when they short put, that means that they have a confidence on the market that a floor is built and, we should be rising higher. So yes, so that is how, the sentiment indicators have been playing out. So always remember that, sentiment index should always be, seen with respect to the price, because sentiment indicators will tell you one thing, but then the next thing is that the price should confirm it. So all this while, the the sentiment indicators were showing a red flag, but prices were, in no man's land. I mean, it was neither confirming on the downside nor it was confirming on the upside. But with today's breakout and this sentiment indicators also cooling off, this indicates that now again the sentiment indicators can rise higher. I mean, all this ratio that we discussed. And if these ratios kind of rise higher in the near term, then that should also lead to a positive momentum in the near term. And the main thing I think I'm banking on is the way FIIs position, the way FIIs position themselves. Because right now they are still significantly short if we go by the history. So typically, what happens is that once they go towards this oversold zone, they will tend to go towards, plus 60,000 contracts or plus 90,000 contracts on the upside eventually. Okay. So basically what happens is that, it kind of becomes a cycle sort of thing. So even in the past, when we see there was this 1 lakh mark, then they again came back towards the higher levels and they went long by 60,000 contract or 1 lakh contract. Again, they went down, again, they came back up. Again, they went down. And again, I am expecting that they should eventually turn positive to the tune of, say, somewhere around 60,000 to 90,000. And if that happens, that should further give legs to the Nifty index to rise higher in the near term. So that's where, I'll be watching very carefully how the sentiment data plays out. But yes, the price action over here in the short term seems to be suggesting that a short term breakout is done and the momentum should continue on the upside in the near term.
Wonderful. That was very well explained, Jay. Thank you so much. And certainly without Strike, we wouldn't have this clarity. It's certainly proving out to be the nation's most advanced data and analytics tool. For those of you who haven't experienced Strike as yet, I'll be leaving a link down on the description. Go onto it. You can sign up for a free trial right now, so experience it first-handedly. And of course, while you're at subscribe to Indiacharts and also click on the bell notification so that next week when our midweek is up, you get the first-handed notification. Thank you so much for this wonderful session, Jay. It was lovely. I will see you next week. And you guys stay. Yeah. Thank you. Bye-bye.